So there are the people that say the market's going to continue to go up, right? And they say a couple of different things. Number one is earnings. Earnings are absolutely skyrocketing. So Apple, right, is of course one of the largest companies in the US stock market. It's worth over $1 trillion. I mean, just unfathomable even 10 years ago that a company would be worth that. Their most recent quarterly earnings. Now, Apple does not make huge things, right? They don't make cars, they don't make houses, they don't make industrial equipment. They make things that cost anywhere from, a couple $100 to a couple thousand in their computers. iPads, iPhones, things like that. I mean, they're $1,000 max. And they had $111 billion in revenue in one quarter. It's ludicrous. It's ludicrous how much money that is. And that is 21% higher than it was this quarter last year. And most people are kind of think that this next quarter is, because of course that was kind of the meat of COVID and all the shutdowns, is going to be even more. So when people say earnings are great, so the stock market is going to be good, I'll give you the best example that I kind of what that means. When I was in business school, so a long time ago, I was always astounded. I was just getting into the, understanding how stocks work in businesses. I was always astounded. So, I'd be in school and I would hear, okay, Coca-Cola missed their earnings by 1 penny. And as a result of that, their stock is down 7%. And I would think, holy cow, 1 penny leads to 7%. And that leads to the kind of the explanation of what is a stock, right? I think everyone knows a stock is a piece of a company, but what is the value of that company then? And what drives the valuation of that share? So a little bit more specific of a definition, I think, is that a stock is the net present value, the value today of all of the future earnings that those shares are going to have, right? So it's not the company that's worth anything, it's the earnings it generates that are worth something. So if you think the earnings are going to be X, and even though they only miss by a penny, that's a penny per share, and there's a lot of shares. So you go from X to Y, and you think, okay, now I'm going to earn less money per share on all of the shares in the company forever, right? That drastically changes the valuation, the net present valuation today. So when earnings are good, the opposite happens, right? When you're up 21%, you go from here to here, right? And then the stock now has a ton of extra value, and that's what's happening. So the mother's milk of stocks is profits and earnings, and they look great. So that makes people very optimistic. Also, some reasons is I think a lot. There's a rule of thumb that says sell in May and go away, and they kind of come back and buy in September. I've always thought that was silly because it's almost never true. 70%, 2/3 of the time that the summer, the stock market actually makes money over the summer. So I think people are starting to kind of come around to that and realize that. So that makes them pretty optimistic. And the presidential cycle, you can like or dislike Biden, and I don't think we're here to talk about that today. But most of the time, when the president's party is also in power in the Senate, even by the slimmest margin, and in the House, even by an also fairly slim margin, you can still get some of their ideas through that wouldn't get through, if Mitch McConnell, was in charge, and he was, and he had the majority, in the Senate. So some ideas are going to get through, and that generally means spending, when you're talking about the Democrats. So they want to tax people at the very high end, and they want to spend that money, and they're not shy about doing it in deficits. Again, that's not a knock on Democrats. It's just saying what it is that they tend to, especially this cycle, are talking about. So, spending is good for the economy, right? It keeps the economy going, right? All of the stimulus. You throw in there low interest rates, the Federal Reserve stimulating, low unemployment, and kind of just like an overall stimulated stock market, right? With the ton of stimulus, the people that think the market's going to go up feel pretty comfortable, So, and in that case, that's great. But I think in the back of their mind, they're still a little bit worried, and we're going to talk about some things we can do that have a lot of upside, but also, may be able to have some downside protection. Then you have the people that think the market's going to go down. Jason, obviously the market is going down. Go to the bottom first. There's all markets at all-time highs. We're doing all of this stimulus that's going to dry up at some point. We're doing all of this, kind of like keeping interest rates down, right? The Federal Reserve has a big part in that by buying up all the bonds to keep rates down. So they're going to stop that eventually, and they're going to do what's called taper. If you remember from a couple of years ago, they started tapering after the 2008 recession. It was called the taper tantrum. The market went down and bond interest rates went way up. So there's going to be another taper tantrum, and then inflation. Inflation has not really been a problem for almost 20 years. The government has done a very good job, along with the Federal Reserve, of keeping inflation down. Going all the way back to 1981. For those of you that remember, Ronald Reagan just became president a year before. Paul Volcker was the Federal Reserve chairman. And, they basically got together, caused a recession on purpose. For those of you in Michigan, it was a very severe one. The automotive company got killed. My dad was a builder. I mean, he didn't sell a house for 2 years. So it was bad, but they fixed inflation, right? I mean, it really has been almost not a problem at all since then, right? In 40 years. So now we're starting to get some inflation. Inflation could be as high as 3.5% or 4% this year. We've been at almost zero for several years, and the Federal Reserve is okay with about 2%. Now we'll talk about that a little bit more, but the people that think it's going to go down think inflation is really going to hurt us and kind of drive it down and drive the market down. So those are kind of the reasons that the market might go down.